Are you a freelancer starting up a business? It may be important for you to listen to these tips and how you can keep your bookkeeping and accounting intact for when you file your first tax return. First of all, after you incorporate, you should get a business travel visa, a business saving account, and a business checking account opened with your articles of incorporation. The business travel visa will allow you to invest your points for purchases that you make for your business so that you can reinvest them back in your business for things like Expedia, Starbucks, and Amazon rewards. Also, the saving account is important for you to put 13% of your revenue into that saving account so that you can save it for when you have to pay your taxes at the end of the year. The checking account is important because the checking account should capture all the revenue that comes in for your business. You also need to set up an invoicing software to capture the payments that you receive. So whether that's Stripe or QuickBooks, you need to do something to capture all of the revenue that you're creating so you know how much HST you're accumulating over the year. In addition, when you incorporate, you have 372 days in the future to book your year end. But I have a tip for you. When you incorporate, it's important to declare a year end of either December 31st or January 31st. Why, you ask? Well, the CRA demands payment for your taxes 3 months after the year end, and you have to file your taxes at least 3 months after the year end. Okay? So, if you book your year end January 31st or December 31st, your taxes will be due either April 30th or March 31st. So, your personal taxes are also due April 30th and March 30th. So it just makes it an easier process for you to get your corporate taxes done, as well as your personal taxes and your GST, HST done one time through the year by declaring that year end of December 31st and January 31st. It's important to keep your receipts for large ticket items, things like furniture, equipment, cars, computers. You should keep those receipts for at least 6 years in case you're audited. The CRA definitely looks for those types of receipts. If you found this information useful, please feel free to share the link in my bio with someone who could benefit from this information also.